This video is sponsored by Morning Brew. Click the link in the description below to start getting your summary of the daily news today. FUD! There's only one thing I hate more than short sellers, and that's FUD! Everywhere I look, there are FUD ruckers spreading lies and uncertainty about my positions, and I've had it up to here. Okay? Meme stocks won't go up forever? FUD. Rocket emoji isn't an investment thesis? That's FUD too. You're all just a bunch of haters, and I want you to know that you will never take away these diamond hands, even if you tried. Because they're physically stuck to my body. They're actually melded to my arms. Please help me. If you follow investment personalities or read through online investment forums, chances are you've come across the term FUD, an abbreviation for fear, uncertainty, and doubt. It probably doesn't seem significant enough to warrant a whole video, but the term has become a big part of the retail investing culture we've seen develop over the past few years, with investors using it to help identify and avoid irrational fear. But while that probably sounds like a helpful thing, and indeed it is to some degree, some people have taken it a bit too far. It's not to criticize people who use the term FUD, since that would be silly, but it is to highlight why you should be careful falling too far into the anti-FUD mindset we've seen proliferate online. Chances are, in the long term, it'll be to your own detriment. But before we get into my whole long rant about that, yes, I am going to over-explain FUD to start, because there is some history behind the term. And that's what I do here. It's my job as a YouTuber. Papa needs that content. So, what is FUD? Well, as mentioned, it stands for fear, uncertainty, and doubt. And it's essentially the investment world's version of fake news. The term is largely attributed to Gene Amdahl, who in the 70s coined FUD to describe the malicious marketing tactics used in the computer hardware space by companies like IBM to gain customers. At the time, IBM would use its dominant brand to sow fear, uncertainty, and doubt into its customers' minds about competing products. Agents even used the axiom of nobody ever got fired for buying IBM equipment to really drive home the point that employees were risking a bit more than a bad user experience if they were to go with someone else. Since then, the term has been adopted by the investment industry, particularly among retail investors and crypto enthusiasts, to label irrational or speculative concerns of investors around specific investments. It's not to say that all FUD is inherently false or misinformation, but it often refers to rumors spread on social media, or at times mainstream media, that are causing investors to panic or worry about a position. So that's the gist of FUD. But why is it such a popular term these days? Well, the GameStop fiasco seems to have played a big role in the term's resurgence, because in the same way the term's origins had to do with big players influencing the market, we've seen a spotlight turned onto similar practices from institutional investors. In addition to the unethical trading activity involved with the GameStop situation, the event drew a lot of attention to how short sellers frequently campaign against the companies that they're betting against, even when their thesis is based more on mere speculation than sound research. This problem is amplified by the fact that, when compared to the everyday investor, these players have pretty sizable platforms for spreading their viewpoint. Pundits are often called onto news stations to share their thoughts on certain stocks and investments. So naturally, many take the opportunity to promote what they have their money in, and likewise to spread uncertainty and doubt about the positions they're betting against. Now, this might all sound a little conspiracy-esque and tinfoil hat-like, but the idea that some short sellers go around to spread lies about the positions they're shorting against is not all that far-fetched an idea. In fact, it's a documented practice that's as old as short selling itself. As my friends over at 2 Cents highlighted in our recent collaboration video on short selling, which you should definitely check out in the description below, one of the first stock short sellers on record, Isaac Lemaire, used FUD in the 1600s to enrich himself, spreading rumors and lies about the Dutch East India Company, a stock that he had bet against. So in its truest form, FUD is a label intended to combat these sort of tactics by singling out misleading information that's intended to elicit a negative response. The term also comes with some negative connotations. For one, there's a general consensus that all forms of FUD should be ignored, since it's essentially been identified as noise that's perhaps been maliciously spread to influence your decision. It is also generally used in a belittling way, as it inherently implies that the person sharing the information is being influenced by their emotion rather than their logic. In some cases, it can even draw disdain from other investors if they believe that the shared information is working against their interests. But this is where things start to get a little messy around the anti-FUD culture. Similar to how some people overuse the phrase fake news, it's become commonplace to classify everything that goes against your thesis as FUD, especially when investors are overconfident about a given stock or cryptocurrency. When someone believes it's impossible for something they own to fail, they're quick to call everything against that position, including real and material negative updates, FUD. Now, again, this is not intended to be a criticism of anyone whose lexicon includes FUD. We should, of course, ignore the noise around our positions. That's a commonly shared bit of investment wisdom. And I understand why people don't want to be bombarded with negative news about their holdings. The problem is that dismissing everything negative about a stock as FUD just trades one problem, making an emotional decision based on fear, with another, confirmation bias. Confirmation bias is a response to cognitive dissonance, that uncomfortable feeling we get when something contradicts our held beliefs. And it causes us to place more weight, or merit if you will, on information that supports our belief and less so on information that contradicts it. In other words, we already have a natural tendency to discredit negative information about our holdings because this information doesn't make us feel good. And obviously, one way you can get rid of that feeling and explicitly discredit something is by labeling it as FUD. The reason this is a bad thing is because confirmation bias impairs our ability to make fully informed and rational decisions. If you only listen to the good bits of a story, you'll never have a full appreciation for the investment as it truly exists. And as a result, you cannot make an objective decision. And funny enough, the prescribed method for dealing with confirmation bias is to actively seek out data that contradicts your view. So clearly, overusing FUD and discrediting negative news isn't helping to address this behavioral shortcoming that most of us experience. I've also seen many instances of FUD being used in a pretty aggressive way. With the rise of meme stocks and cryptocurrencies, which have both put a lot of focus on investment communities, and in some cases have a speculative investment thesis supporting them, investors take an us versus them mentality, where non-believers are shunned, if not ridiculed, for possibly convincing others to sell out and leave the community, hurting those left behind. And it's needless to say that this sort of groupthink comes at a big detriment to proper investment management. Now, there is something to be said for taking everything you hear with a grain of salt, especially when it's coming from someone with a conflict of interest. But we should be applying that same scrutiny to the people that overuse the term FUD. In the same way hedge funds have campaigned to spread negative information about given positions, there are many investors who use the FUD label to discredit material information and dissuade others from selling for their own benefit. So, that's the tricky situation we face. We want to manage our emotions and avoid being influenced by the noise out there, a valid concern that's emphasized by the FUD term, but we likewise don't want to be blind to the truth. And while ignoring FUD can make you feel pretty confident about your holdings, investing isn't about absolute certainty. It's about understanding that trade-off you're facing with your positions when it comes to risk and return, knowing that despite your best efforts, there's always the chance you missed something and that you'll be proven wrong. That's not to say you can't be confident and determined in your decisions and your research, but you can never truly avoid uncertainty, and you probably shouldn't try to. The overconfidence that comes from discrediting all sorts of FUD is a killer in investments. So, how do we manage our emotions, risks, and the potential for misinformation out there? Well, for one, don't ignore information that's been labeled as FUD. Assess the information yourself thoroughly to determine the likelihood and impact of the risk being presented. You don't have to agree that the information is an imminent threat, or even that it's material, but tackle the issue head on, supporting your reasoning with evidence and data when possible, rather than just dismissing the concern. I've personally found a lot of value reading through short seller reports on the positions I hold. At times, they've raised real concerns that have directly played out, so I've benefited from learning that information. Secondly, as mentioned, it's helpful to actively seek out information that goes against your own investment thesis. Doing your own research and rigorously testing your viewpoint is one of the best ways to form a well-rounded and objective opinion on an investment. And by seeking information out yourself, you can mitigate the influence of ulterior motives and the emotions of others. And finally, perhaps a point I'd like most people to take to heart, is don't discourage others from raising critical points about your investments. In many cases, they are your friends, not your enemies. Yes, there are indeed some bad players out there that you need to be careful about, but you shouldn't get defensive or treat criticism about something you have your money invested in as a personal attack, when really it's an opportunity to better understand your holding. I've by far learned the most about investing by being proven wrong time and time again by my coworkers. And I truly believe that healthy and respectful debate is one of the best mechanisms for honing your analytical capabilities and finding the truth. So yes, true FUD should not influence your decisions. But next time someone raises a negative point about a position you hold, even if others call it FUD, engage them. Raise your arguments, but listen to theirs as well, and ascertain whether there's something material worth considering there. Who knows? You may just save yourself a bit of money. Oh, and just one more thing before I sign off. Not that you were thinking this, of course, but just in case. No, I don't have any short positions or a stake in a short selling company. Just felt the need to clarify that for some reason. So as we highlighted, it is important to ignore the noise when it comes to investing, but you do also need to be aware of what's going on in the world and how it might impact your portfolio. It's not to say you should trade on headlines, but you don't want to be blind to important updates. There are a number of ways to stay on top of things, but if you're looking for a free resource to help out, today's sponsor, Morning Brew, is an awesome newsletter that I've personally been reading for a number of years now. They're a publisher that sends out content 7 days a week, summarizing tech, finance, and business news. The newsletters are a 5-minute light read that brings you up to speed on important news. For example, they recently covered the Chinese crackdown on popular Chinese companies like Tencent, explaining how this year alone, regulations from China have cost investors $1 trillion. Yeah, crazy, right? But anyway, Morning Brew is actually the first thing I read every day, because honestly, they're pretty entertaining. As someone who's used to reading the dry articles and company filings that I need to go through for my job, it's a pretty refreshing start to my day. So I highly suggest you check them out. You can sign up with the link in the description. It takes just a few seconds. And like I mentioned, they're completely free. So be sure to check out Morning Brew.